Despite regulatory action against Binance, a surge in Ethereum network activity, and the expectation of a spot ETF approval fueled a price move above $2,000. Ether price is trading slightly higher on November 23rd, maintaining support above the $2,000 level after briefly retesting $1,930 on November 21st. Over the past week, Ether's price has increased by 2.5%, while the total market capitalization has grown by 0.5%. This uptrend can be attributed to improved decentralized applications, metrics, increased protocol fees, in the non-fungible token market. To assess whether Ether can sustain its $2,000 price point, one must consider the repercussions of Binance's recent regulatory challenges following its plea deal with the U.S. Department of Justice, DOJ. Binance leads in Ether spot trading volume, accounting for 30% of ETH futures contracts open interest. The closure of Binance's $2.35 billion worth of ETH derivatives contracts within a short period could have significant consequences. Despite initial analyses showing minimal changes in spreads and liquidity, Binance witnessed net outflows of $1.53 billion between November 21st and November 26th, as reported by Defalama. The regulatory landscape presents risks and opportunities. Some view Binance's actions as evidence of sufficient reserves, while others are concerned about the $4.3 billion fine facing Binance and its $26 million, and that's where former CEO Changpeng sees Zhao. Notably, Bitcoin advocate Luke Boyles advised followers to withdraw their coins from exchanges. Anyone that claims to know which snowflake will cause the avalanche is naive. However, the Binance $4.3 billion fine is a really big snowflake atop a really big pile of snow. Act accordingly. Self-custody now. Hashtag. Even if Binance continues operations and safeguards all client assets, the long-term effects of full compliance and increased scrutiny remain uncertain. Additionally, the relationship between Binance and stablecoin issuers like Tether, TrueUSD, and Binance USD raises further questions. Government agencies gaining access to previously undisclosed money laundering and terrorist financing operations through Binance, including fiat payment gateways and banking partners, increases the likelihood of regulatory actions against stablecoin providers. This news has been particularly detrimental to Ethereum, given Binance's status as the third largest ETH staker, with $1.24 billion in deposits, according to Defalama. However, recent regulatory developments also offer some positives. Binance's move towards full compliance reduces the risk associated with unregulated exchanges, making it more likely for the U.S. Securities, the Generator and Exchange Commission to approve spot exchange-traded fund instruments for cryptocurrencies. Leading industry mutual fund managers such as BlackRock and Fidelity have recently expressed interest in launching Ether spot-based. Furthermore, the SEC sees lawsuit against Kraken on November 20th, which lists 16 cryptocurrencies as securities, excludes Ether. This omission reduces the likelihood of regulatory actions against the Ethereum Foundation and entities involved in the 2015 ICO, providing a silver lining amidst regulatory uncertainties. Assessing the Ethereum network's health, Ethereum dApps achieved a total value walked of $26 billion on November 23rd, representing a 5% increase from the previous week, according to DApp Radar. However, a hack significantly impacted DYDX, resulting in a 16% decline in the protocol's deposits. While Ether's market capitalization of $248 billion trails behind Bitcoin's $728 billion, the two networks generate similar protocol revenues. Over the past 7 days, the Bitcoin network collected $57.5 million in fees, compared to Ethereum's $54.3 million. These figures do not include ecosystem fees from platforms like Lido, Uniswap, or Maker protocols. Ethereum also reclaimed its leadership position in NFT sales, recording 12.6 million in transactions within 24 hours. Despite a brief period with Bitcoin led in NFT activity, Ethereum remains at the preferred blockchain for prominent NFT projects. The positive performance from Ethereum on November 23rd can be attributed to improved on-chain metrics, growing expectations of spot ETF approval, and reduced regulatory concerns stemming from the 2015 ICO.